Imagine watching a line climb higher and higher on a chart. Year after year, the market rises. New highs, new records, more money flowing into stocks and assets. It looks like the world is getting richer. But sometimes a rising line doesn't mean things are growing. Sometimes it means the measuring stick is changing. In this video, we're going to look closer at what those rising charts really mean.
For decades, the market has told a very simple story. Zoom out, and it always goes up. Charts rise from the bottom left to the top right. Financial media repeats the same message. The market grows, the economy expands. Just stay invested. But what if the growth we see isn't the whole story? What if part of that growth is an illusion? Not a conspiracy, not manipulation, just mathematics. Because when we look at the market, we measure it in dollars, but dollars themselves are constantly changing. Over the last century, the supply of money has exploded. Governments print more. Central banks expand credit. Liquidity floods the financial system. The measuring stick got smaller. And when the amount of money increases, something predictable happens. Asset prices rise. Stocks go up. Real estate goes up. Crypto goes up. But that doesn't always mean wealth increased. Think of it this way. Sometimes it simply means if you measure your height with a ruler that shrinks every year, you will appear to grow taller even if you never changed. The same principle applies to markets. When the currency loses purchasing power, assets priced in that currency naturally rise. So the question becomes, are markets growing? Or is money slowly losing value? Consider inflation. $1 today does not buy what it did 20 years ago, or 50 years ago, or 100 years ago. Your grandparents could buy a house for a fraction of what it costs today. But wages didn't increase tenfold. Homes didn't suddenly become 10 times more valuable. The currency changed, and when currency changes, every chart measured in that currency changes with it. This is why markets appear unstoppable. Part of the rise reflects real growth.
The stock market keeps hitting new highs. But what if the market isn't really growing the way people think? Wait till the end and discover that while the dollar loses value and wages stay the same, the value of owned assets is pushed higher and higher.
Innovation. Productivity. Technology. But another part of that rise is simply monetary expansion. More dollars chasing the same assets. More liquidity lifting prices. This is why the stock market can surge even when the economy feels weak. It's also why asset owners tend to get richer while wage earners struggle to keep up. Because assets adjust to inflation, but wages lag behind it. This creates the illusion of prosperity, markets climbing. Headlines celebrating new highs. But many people feeling like they are running in place. Because if your income grows slower than asset prices, the system quietly moves further out of reach. This doesn't mean markets are fake, far from it. Markets are one of the greatest wealth-building machines ever created. But understanding this illusion changes how you see investing. You stop asking one question, is the market expensive? And start asking a different one. What is happening to the currency? Because when the money supply expands, assets almost have to rise. It's not just growth. It's mathematics. Liquidity flows somewhere. And historically, it flows into assets. Stocks. Real estate. Commodities. Anything scarce. This is why some investors say something strange. They say the safest place to be during monetary expansion is inside assets. Because cash slowly melts, while ownership adjusts. So the goal of investing isn't just to grow wealth. It's to preserve purchasing power. To stay ahead of inflation, to own pieces of the system instead of being priced out of it. When you understand this dynamic, market highs stop looking surprising. They start looking inevitable. Because as long as currencies expand, asset prices tend to follow. Not every year, not every cycle, but over long periods of time. Which leads to the real lesson. The illusion of growth doesn't make investing pointless. It makes investing necessary. Because if the measuring stick keeps shrinking, the only way to keep up is to own what's being measured. Ownership protects you. Assets adjust. And over time, they absorb the inflation that erodes everything else. So yes, markets rise. But part of that rise is the story of money itself. And once you see it, you never look at the chart the same way again.
The market may look like it's rising, but sometimes the truth is simpler. The dollar is just falling.